Money day, guys and girls, hope you're blessed. Now this week has been a phenomenal one. We've been able to catch over 1,600 pips across 4 trades. Now although we've had some losing trades this week as well, the wins have far exceeded the losses. Now with that being said, guys, I've actually shared a weekly webinar call with people inside of my community, which I'm now going to be sharing with you guys. And this is going to break down why I took the trades that I took this week and giving you guys also some free education, explaining a bit more about the fundamental aspects of trading. And of course, most importantly, from a technical perspective, why I'm entering these trades. So please sit back, relax, watch this video. Of course, if you guys think this is valuable, share this with a friend, drop a like, a comment and subscribe. But most importantly, guys, send a message to myself by clicking the link below in the Telegram and get access to my free Telegram community, where of course, I do have a paid subscribe community where I'm giving you guys this value. So guys, relax, enjoy the show, and remember that every day is money day. Peace. Money day, guys and girls, hope you are all blessed. Now look, if you're here right now on this live stream, watching what I'm doing, I'm going to break down for you guys how I was able to gain over 1,500 pips throughout the week. Now, of course, with that being said, this week was quite a difficult week because we had a lot of news being released. We had NFP, we had the ECB interest rate, we had Jerome Powell speaking twice, we had jobless claims, we had the unemployment rate. We had a lot of news taking place, and of course, when it comes to trading, you know, past results don't guarantee future success. So what I mean by that is just because you win one trade doesn't mean you're going to win another. There's weeks where I have losses, there's weeks where I have pure wins, okay? But at the end of the day, it's not about how much you win, it's about how much you can stop yourself from losing. Okay, trading to me is not about thinking about how much I can win. It's about controlling my losses. I know that I can have 10 losses, right? I can have 10 losses, okay, at 1%. But if I win 2 trades with a full 3% margin, I've now just pretty much made back 6 losing trades. So if I now win a 3rd trade, okay, I'm now short 1 winning trade. Meaning, if I win 4 trades at 3%, 3, 6, 9, 12, I'm now up 2%, guys. You can lose 10 trades and risk 1% and be down 10% over 10 trades. And you can win 4 trades at 3-to-1 risk to reward, and you've now just netted 2%. So it's very important that even when you're, following my trades, even if the last trade was a huge success, don't double down on the next trade, because this is not a marathon. This is not a sprint, this is a marathon, okay? This is a business, it's not a game. So we're not just thinking about what's happening today, this week, we're also thinking about where we're gonna be in 2 months' time, in 3 months' time. A lot of you here right now, you're paying a subscription fee for me, and I want you to understand you're making your money back. The most important thing you should think about is making your money back. The second you make your money back, now you know it's a risk-free investment. And then after that, it's important for you not to get greedy. This is not something that's going to change your life overnight. If you're taking my trades because you need to buy a new car or because you need to pay your bills, you're probably going to over leverage your trades. And then unfortunately, you might just be that unfortunate person that catches the wrong trade, which is a losing trade, and you've put everything into it. So it's very important, guys, to stay patient, man, and to stay consistent, okay? Now, I'm going to take you guys over Euro USD. Euro USD was a buy. I sent out this buy on Tuesday, I believe, okay? Now, I sent out this buy for a couple of reasons, so I'm going to give away some free game here. This candle here, let's move this out of the way. This candle here was a New York session candle. Price played into the session candle, probably came to about 50%. 50% of this session candle. All of these purple boxes, okay, they're session candles. What I do when I'm trading a specific pair, I mark out the session candles, okay? And if price can move a certain amount of pips past the candle and then come back, which is the pullback, that is when I actually think about entering a trade. So the question becomes, how many pips do I need to see price move past it before it comes back and it's valid for an entry? That's a question that, of course, members of our education are going to get access to. But for you guys, what you can understand here is marking out the session candle is half of the work done. Okay, you mark out this session candle. There was a couple of reasons why I bought from here. This yellow zone represents an institutional candle, which turned into a breaker because price pushed up, came down, played above it, so we went higher. But the session candle gave us a really nice buy. Price pushed up, and we did have CPI. I think we had CPI throughout this week. We had CPI on Tuesday. The news that we had on Tuesday really did catapult this Euro USD trade. Of course, we hit TP1, price was a bit slow, came back down, was dilly-dallying about, but eventually we had TP2 and 3 hit. And of course, you know, prices kind of still continued pushing. But the pair that I want to bring you guys attention to is the peso. Okay, this pair's moved over 1,380 pips and it's still going. Okay, now for a lot of you might be thinking, Vel, what the hell is US dollar Mexican peso? I've never traded this in my life. Well, this is a pair that I've monitored for a number of years. To be honest with you guys, I think 2021 was the first time I came across the Mexican peso. I went to Mexico for 2 months, and whilst I was there, I just found it a lot easier to be trading a pair that could be moving throughout the Mexican time zone, as opposed to, you know, still trading London pairs and having to wait up till 4 or 5 a.m. just for the London Open. Okay, so with this pair, naturally what you want to do, guys, when you're looking at trading is you always want to tackle the higher time frames. Tackle the higher time frames so that you can have a better bias. Once you have a better bias on a higher time frame, you can refine the time frame down into a smaller time frame, and you can start to now look for your entry. Meaning, off of the daily time frame, I knew that I was going to sell this. Why? We had a new low down here, so I went from this swing high to this swing low, and I said to myself, let's play this, let's do this here. Cool. When we came down here and we made this low, okay, I said to myself this, cool, price has made a new low. Therefore, if price can pull back up, there's going to be a unique area that I'm going to buy from. And I want you to think about this like a discounted price. You know, if you've got an iPhone, or let's say, for example, you want to go buy the new iPhone 15 or 16, whatever it is, you want to go buy the new iPhone, but you hear word that Apple are going to be releasing a 62% discount tomorrow. Would you wait? Would you go and buy the iPhone today, or would you wait for the discount? You'd wait for the discount, right? So with that being said, how I look at the Fibonacci is each level is a discount higher, okay? I don't want to buy at a high price, okay? I want to buy at a low price. I don't want to buy when the price has already doubled, right? It's a bit like when you look at, you know, something rare, okay? Something rare, limited trailers, limited edition, anything, okay? When the price is doubled, people don't really want to buy that unless they believe the price is going to continue getting higher and higher. So in this instance, because price is already coming down, unless price can push back up, that is the only time I'm going to be interested in selling. I don't care if price continues coming lower. On the daily time frame, we need a sufficient pullback. That pullback needs to be above the 50%, more specifically the 62% or higher. So with that being said, price, of course, if it can come to the 62, the 70, or the 79. 79 is the G spot for me, and the 70 is the sweet spot. If price can come in between those areas, the last result would be 88.6. But if price can come in between these zones, then I'm really going to look to sell. So with that being said, if we play this out, because we already know what happens, okay, price comes, I'm just going to play this out, it doesn't really matter. Price comes to the 70%, in between the 70 and the 79%, that sweet spot, G spot, price comes there, and eventually it wicks this area and then it comes down lower. So this is an actual trade that you can see here from January the 23rd, guys. You guys could have been in this position. This is what you really call a swing trade, okay? Because or even a swing to position trade, really, because from January to now, you know, we're 3 months in, okay? We've just approached 3 months into the year, the 3rd month into the year, excuse me. This could have been a trade that you would have been in profit for the past 3 months, okay? Or let's just say 2 months, because it's the 23rd of January, today's the 9th of March, okay? So a little inside 8 weeks, and what we would have been able to understand here is when price is now set, okay, when price is set from 70% to come down lower, the first area I'm interested in price reaching is to here, this minus 14%. Now, this minus 14% also lines up with a couple of other things from a couple of other things that contain my interest. A bit tongue-tied there. The first thing is that these blue levels, they represent a significant level of structure, okay? If I go on a weekly time frame and I go on the line graph, could be the weekly. The weekly here, we have levels of structure. It might have been the daily one that I drew it on. Let me double check. Okay, it was the daily levels, okay? I drew out daily levels to structure. For some reason, this computer's moving insanely slow. It's okay. We drew out levels of structure here, guys, which just shows us that these are key levels that the peso will react from or has reacted from in the past. So because we've had a reaction already from this level above, price has come down, it's made a new low, it's pulled back up to make a lower high. Now we want to see price make a lower low. Now, if I was a gambling man, if I was a betting man, which in this case I don't need to be because I have historical data, but all I need to think about is an area that price has been to before and reacted from. And this is of course one of the areas that we've seen. So we're sitting inside of this candle over here as well, which I can highlight for you guys on the daily. Let's put the magnet back on. What is that? That is not a, no, that's the wrong thing. Cool, let's see here. Cool, we're currently sitting inside of this zone right now, okay? Sitting inside of the zone right now. We haven't yet, closed beneath this daily. We haven't closed beneath this low, but we kind of have actually, but of course it's Saturday now. Let's see how the markets open back up. But this candle price is currently sitting inside of. Now, I'm not going to be unhappy, guys, if we see a pullback. If price pushes back up into this area and then comes down, I'm not going to be unhappy with that, okay? But what I do want to see is the continuation of this United States versus Mexican peso strength, okay? Now, why am I trading the US dollar against the Mexican peso? Because it's much more less manipulated. If the dollar is strong, USD Mexican peso is going up. If the dollar is weak, this baby's coming down. It is as simple as that, right? Now, we had the interest rate, we had non-farm payrolls, we had the Fed Jerome Powell speaking last week. If you guys are not inside my educational channels, I'm going to upload a video after this, okay, inside my educational Telegram channel, and I'm going to show you. He was getting peppered. He was getting peppered, question after question, talking about inflation. They were saying, Chairman Jerome Powell, 6 months ago, last year, you said that things was going to be great. You said that inflation, we was going to curb inflation by doing X, Y, and Z. And now you're saying something completely different. He's of course trying to say, well, everything I said before, we didn't know this was going to happen now. But the reality of the whole picture is, guys, he's a politician, man. He's always going to say stuff at the time what suits him. But why that's important for us to understand is because this is affecting the markets. When he's coming out waffling, talking nonsense, when he's making himself look silly because he's contradicting himself, this doesn't give any strength to the dollar. This gives weakness. This gives uncertainty. And with that comes a weaker dollar. So I'm going to show you guys just this entry very briefly. I don't want to spend too much time on this, but this was a hell of a move, as we would say. 6 hour time frame. I'm looking for a pullback. Cool, here we are. So the 6 hour time frame, we had a bearish engulfing candle. Okay, price came down, and I said, cool, when price pushes back up on this imbalance tool, we're going to short it. Okay, now this pair does move slow, guys, so you don't expect to get into this and think that within an hour or two you're going to be in profit, because sometimes it does slow down. Okay, but we had this area, price pushed into this candle, filled the imbalance, then it came down lower, we hit TP1, then 2, and then we got a pullback. Now we can see with this pullback we had this wick push up, and if we go onto the right time frame, 2 hour time frame here, we had a wick pull up into this area, fill some more of the imbalance. Let me move this out of the way for you guys quickly. Price filled some more of the imbalance. We can see we pulled up into this candle here, and then we got a further reaction down to the lower room, and of course price has continued going. So guys, with the USD Mexican peso, we was able to catch 1,380. If you guys stayed in that trade, then you'd be looking at near enough 1,850. Now I'm gonna look to take another trade on this when the markets reopen. Of course, not necessarily straight away, but I'm gonna be looking at this. But I need you to understand, sometimes, guys, when the smoke's at the station, the train's already left. Okay, I've already shown you guys on the daily time frame, the best place for you guys to be selling this, okay, was up here. Now it's down here. We're not going to be selling. We can't be selling from here. So we've got a couple of things that we could do. We could either wait for price to pull back up, okay, wait for price to pull back up to think about getting into a sell, or we see what price does around this area here, this -14, and this, of course, weekly structure level. We want to see what price does around this key level here, and then see if we can get a buy to actually have a retest back upwards into a selling zone. But we do have to be patient and we have to see what happens. Okay, now I'm going to leave you guys, well, not leave you guys, I'm going to go into Euro JPY. Now, a lot of you may be wondering, Cavell, well, how did you see this happening, bro? You jumped into USD Mexican peso, it slapped down. You jumped into Euro USD, it pumped up. How did you see this happening? Now, a lot of the times, guys, you will hear people say that they've got strategies and, you know, look, I'll be honest with you. See, when it comes to trading, yeah, it's a very peculiar game. Like, you can't talk the talk and not walk the walk. You can't give it the big earn and say this and say that and then not deliver. So it's a very high pressured environment. And it's important to understand, guys, that when you've got someone that can deliver, okay, it's important that you understand the teachings of what they're saying. So I'm not here to tell you guys to believe me and to think I'm the best of all time, because at the end of the day, I'm only 7 years in the game, right? There's people that's been in the game 15 plus years. But what is important is to understand, when you find a strategy that works for you, to double down on that, to practice and practice and practice. Okay, don't just run into trading with money in an account and say, look, man, I trust you, here's £1,000, I'm going to follow your trades and hope for the best, because that's just essentially gambling, right? You need to understand that before you drive a car, okay, you learn how to drive a car. So before you start trading, you should learn how to trade. And that doesn't mean you need to spend countless hours on the charts going through a one-to-one with a mentor. No, it just might mean you need to know the basics. You might need to know how the markets move, why they move the way they move, how to get in and out of trades, and most importantly, what pairs are more important to trade around certain time periods. Understand as much as you can about this market you're involved in, and it's going to become a lot more easier and interesting, guys. Okay, now I want to give you guys my analysis behind the JPY, and this is really nothing to do with Euro JPY. What it's actually to do with here is the current state of the JPY. Now, for those of you who don't know, the yen has had a deflation problem for a number of years. I think I'd say for about 10 years they've had a deflation problem, meaning with most countries you get a 1% interest rate, and with the JPY, with the Japanese yen, okay, their interest rates have been minus 10 from about 2013, if I'm not correct, right? From about 2013, they've been given a minus on their interest, meaning that you would have to pay to keep money in your bank account. But for such a long time, the yen has been seen as a safe haven because they've been given a steady minimal interest rate, which means that there's no risk. If you want to put your money into bonds, you know that you're not going to lose any money putting your money into a bond in the yen. But essentially, what's happening now is the yen are kind of moving away from their deflation problem, and there's a lot of talks of them increasing their interest rates. Now, because of that, okay, that means the yen is most likely going to get stronger. So this was based on a lot of research that I've done online, but I actually done this. If you watched my previous YouTube video, and if you haven't watched them before, then make sure you subscribe so you can see the content. But I spoke about this. I spoke about what I wanted to happen with the yen, and it literally happened. Now I'm going to give you guys some free game, okay? JPY basket. For those of you who don't know, okay, the Japanese basket. What this is very similar to the DXY. Okay, if the DXY goes up or down, the majors follow it, right? Now with the Japanese yen, this is pretty much the JPY DXY. Okay, this is the Japanese yen indicator, meaning if this goes up, the yen gets stronger. If this goes lower, the yen gets weaker. Okay, now with that being said, okay, last week, if you guys could watch back on my YouTube channel, you'll see the Market Monday, the first Market Monday video I uploaded. We was currently down here, okay? We was around here on Monday, okay? And I said that I wanted to see price react and push up and grab the liquidity in this area here. The reason why I suspected that price would do that is because I told you the Japanese yen are on the rise. They are on the come up. They are looking to increase their interest rates, which is going to change the game massively. Think of it like this, guys. If right now times are very uncertain and you know there's two places you can put your money. You can put your money in a place where they can't guarantee you a return, or you can put your money in a place where they can guarantee you a return. That's not going to be a lot. Which one would you go for? You'd go for the guarantee of the return. That's not a lot of money. You would go for that. Now, in layman's terms, why I'm saying that is because that is essentially what the Japanese yen is. The Japanese yen right now are becoming a place where investors can put their money and it can at least mature and be guaranteed. Okay, a lot of economies right now are very unstable. So just, and this is just a small introduction to the fundamental, global economics, but it's important to understand here that the yen was suspected to get stronger, and I didn't need to read. I could have read stuff which helped me, but if I didn't read stuff and I looked at the charts, then from a technical perspective, guys, we've got this low and this high, right? Price has come down, and the same area I told you guys about earlier on, the 70 to 79% sweet spot, G-spot, okay, it's come down here and it's reacted. Now, as I told you guys with the Mexican peso, I believe it was, I said to you guys, my first area that I'd be looking for price to reach for a take profit would be the minus 14%. Price reached the minus 14%, a little over, and then it came down, retested, and pushed back up. Now, forgetting about the retest and anything that's happened after it's hit the 14%, my point is, it's come down inside of this zone, okay? We've got the discounted price, and price has skyrocketed up. It's came up, it's taken out this area here of liquidity, and of course, it's taken a further area above, it's pushed back down, and it's kept on going. But all that means is that when price was down here, when we was bearish, okay, guys, this was Friday, this was Monday, Monday just gone. When we was down here on a bearish candle and we wanted price to react, okay, let's look at Euro JPY. Euro JPY was doing something similar, okay? It was pushing up. It wasn't really showing much signs that this was Monday, the same day of what I just showed you guys on the JPY basket. Price was kind of weak, okay? And hence why the euro was getting stronger, because it was kind of weak. However, if I go down onto the 1 hour time frame here, guys, what I want to show you guys is a couple of things. One thing here is this is my institutional level as to the reasons. This is the reason why I usually contemplate taking trades, because of these green zones that you'll see on my charts, okay? Price came down, took out these lows on the hourly, pushed back up, filled the imbalance, and of course, it reached my institutional level, which gave me a reason to think about selling this. But at the time, I wasn't too confident, and the reason why I wasn't confident, the yen wasn't really showing much signs of strength, and Euro JPY is kind of like an ungodly hour moving pair. Like, for me, because I'm in Dubai, it moves really, really early in the morning, okay, or it can move really, really late in the night. And because of that, I'm not awake. I don't see it happening. So what happened was, in this case, I saw this move happening throughout the day, and I thought to myself, you know what, Cavell, I'll take a small entry if I can retest. And we retested here, so I took an entry. What then became important for me was to think, can I send this out inside my community? So when I then saw price coming down lower, there was a couple of things that I wanted to see in order for me to feel confident with giving you guys this trade. One of those things, guys, was of course, okay, it was of course checking the Japanese yen basket, and I saw that it was growing with strength. I did get nervous when I saw this massive candle like this though, but if I go into the half hour time frame, on the half hour time frame, guys, what I started seeing here was just I started seeing a redistribution schematic. Price was moving sideways. We were slowly making a low, wasn't really making a new high. So I said, cool. I like to see this off of the hourly. We've already seen we're making lower lows, lower highs. Let's send out the trade. Now we sent the trade out. TP1 was hit, I think, maybe within a few hours. And then that is when the long wait happened, right? From Wednesday, the whole of Wednesday to Thursday, right? Thursday morning, look here, look, 1:30, 2:30, 3:34, 5, 6 a.m. This is UK time, okay? This is UK time, it's here. But what happened was the whole of Wednesday price was flat, okay? Thursday came around and we started dropping. It was really like Titanic, guys. We started dropping out of the sky into the abyss. Now, with that being said, off of the hourly time frame, we then had a pullback opportunity, which was based off of Thursday's news with the European Central Bank's interest rate. It pumped up, we hovered inside of this area, and then prices continued pushing down lower. But that was 164 pips. Now, guys, our stop loss was never in threat. Price never came anywhere near it. But of course, this pair did take a bit of time. Now, I also tried to sell USD JPY was a pair that I missed out on in terms of the sell. And the reason being was because I was focused on Euro JPY. What I did do on Friday was I sent out a buy. I sent out a buy for USD JPY, and this buy was based on, I don't think it's here. This buy was based on the Fed speaking. Okay, what happened was, is this Friday? No, this is Thursday. Okay, no, it's down here. Where are we? Friday. Let me go on an hour time frame. Aha, yes. So for those of you who will remember, we sent out this trade on Friday. Price pushed up and it came really close to our first take profit target, man. It came so close, 7 pips away. We went risk-free on this trade, so we didn't lose out anyway, but we just didn't get that push that we was expecting. I really thought that the Fed would be quite optimistic. The speech would result in the strength of the dollar, but we just couldn't get there. And unfortunately, that led to price pushing down, spiking us out, and of course, us actually breaking even on this trade. So it wasn't a loss, okay? But if we look at the higher time frame here, again, this is similar to Euro JPY. What's happened here is we've had prices from a higher perspective consolidate, and then when the yen started gaining some strength, we had a massive shift downwards. The momentum for this was absolutely crazy. But of course, guys, there's only so much I can do. There's only so many trades I'm willing to take at once. On Friday, I thought about taking a few trades with majors. I had Euro USD, GBP USD, and AUD USD, I think, and all 3 of those trades lost. AUD USD was in profit, so was GU at some point, and so was Euro USD. However, the strength of the dollar was non-existent, and unfortunately we lost those trades. So again, when you're able to catch over 1,300 pips on one trade, and you've now got another trade of Euro JPY giving you over 165, you've now got the first Euro USD trade, we're already 1,500 pips up. As we approach the latter end of the week, guys, there is no reason for you guys to over leverage, to exclude risk management out of the equation here, because you've done so well to beat the markets that we shouldn't be in a rush to give it back. Okay, what I do like to do is give you guys as many trades as possible, but at the same time, we can only shoot. I will only shoot from what I see. If I don't see something's right, then unfortunately I won't get into it. And of course, the news is always a factor that can make the market swing one way or another, and that's why it's unpredictable. So it's usually best to sit on the sidelines to see how the markets go. Of course, Thursday was the day I sent out those trades. I don't know why I'm saying Friday. Friday I didn't trade at all. Friday I just sat on the sidelines and we left to see how it would work out. USD JPY now is at a very significant structure level. Okay, I want you guys to understand this was a 34-year high. 34-year high. Price did not come near it. It came close, but it came down lower. And of course, now we're in an area again that 70 to 79% sweet spot G-spot. And of course, we're sitting inside of a daily candle. So we could expect to see a pullback. We could expect to see prices pushing up. If we decided to buy from here, this would not be a problem. This would actually be a very realistic, logical area to buy from. This would be a great place to buy from. So when the markets open up on Monday, I'm going to be looking at this. I'm going to be inviting you guys to potentially get into a trade, depending on how the markets move. And that is going to be exclusively for those who are inside my Telegram and Discord community. If you're inside the Telegram, it's important to understand that, look guys, a lot of these trades that I'm going to give to you are the trades I'm taking for myself. I want you guys to make sure that when you're looking at the markets, when you understand what's happening, you always look at the economic calendar first before you make any decision in trading. Next week, next week, what we have taking place is the CPI for the dollar. We've got the CPI for the euro. Now, the German economy is the largest economy inside of Europe. Therefore, if the German economy is going down, then that means that the euro is going to be going down. So these are important things to look at. We've got GDP for the yen, CPI for the dollar, as I mentioned. We've got GDP for the pound. We've got 30-year bond auctions for the dollar. And then on Friday, we've got jobless claims and PPI. So again, guys, it's going to be another big week for the dollar. Of course, a lot of you may be wondering about gold. We've seen gold make an all-time high. It's been, the amount of growth we've seen from gold has been unprecedented, okay? But at the same time, guys, it's to be expected because there is a lot of uncertainty inside of the markets. I won't be looking at gold right now because, quite simply, guys, it's too high. And until gold can come down play around in some areas of structure. There is no point trying to trade gold. Okay, so this of course is what I've been looking at throughout this week. If you're watching this video on YouTube, be sure to like, subscribe, you know the vibes, it's lit side. I want to thank you guys for taking the time to sit on this call. It was a 30-minute call. I know this call might have been a bit long for you guys, but hey, I'm going to give you guys as much as education as I can, when I can, every single weekend. So thank you for tuning in, and remember guys, every day is money day. Peace.